Good afternoon, and thank you for joining us today. My name is Sarah Morgenstern, and I'm a venture partner at Flourish Ventures. Flourish is a global early-stage fintech fund that backs entrepreneurs whose innovations help people achieve financial health and economic prosperity. I am honored to be joined today by Adrienne Harris for an in-depth discussion about the evolving role of fintech in financial health. Adrienne brings a wealth of expertise to this topic, drawing on her prolific accomplishments as an investor, operator, scholar, and policy practitioner. Adrienne is currently a professor of the practice at the University of Michigan, as well as a co-director of the Center for Finance, Law, and Policy at the university. She is a multi-stage investor and advisor and works with a diverse range of technology companies. Most recently, Adrienne was the founding chief business officer and general counsel of States Title, which is soon to go public. Adrienne serves on the board of directors for the Financial Health Network and Beneficial State Bank, and was a member of the Biden-Harris Presidential Transition Team and a special assistant to President Obama for economic policy at the National Economic Council in the Obama White House. So as you can see, we are in singularly fortunate hands for this discussion. Adrienne, to set the stage, we are in the throes of the second significant financial crisis in just over a decade. And while the federal government was as consequential as ever this time around, the private sector featured a more diverse cast of actors than in 2008. And in particular, we witnessed a more visible role for fintechs, ranging from Square's role in PPP distribution to Propel's issuance of emergency cash grants. And in many ways, this more prominent response seemed to signal a maturation of the fintech industry writ large, as startups like Chime and Lemonade have evolved into household names. So against that backdrop, would love your reflections on learnings from COVID, both on the private and public sector fronts. And starting with the commercial side, you're involved with 15 to 20 plus fintechs. What are some of your observations about how fintechs factored into the COVID response and could be helpful, perhaps in ways that simply weren't feasible 10 years ago?
Mm-hmm. Well, it's great to be here with you, Sarah, and I'm looking forward to the day soon to come when we can do one of these in person. And thanks to the Financial Health Network for having me. I think the way you've set this out is absolutely right. Fintech has come a long way since the last financial crisis. We're obviously dealing with a different type of financial crisis now with COVID than we were in 2008. And so the actors are different. The government responses are a little bit different, right? A lot has changed. But I think what we've seen really is the way fintech and those that you outlined in particular were able to play a role really is indicative of how the industry has matured. So if we rewind the tape to 2008, which in some ways was sort of how fintech got started, right? There was obviously technology and financial services before that, but it was around that time, right? When you have 2006, 2007, 2008, Facebook starting, AWS is coming online, right? You're getting the first iPhone, and then you have the financial crisis, and trust in technology was high, trust in financial services was low, and so you had a number of innovators and entrepreneurs say, well, what if we make finance cheaper, safer, faster, right? All of these things. But as you recall, when that sort of version of fintech was first coming on the scene, it was fintech versus the banks, and they were going to disrupt the banks, and Citibank was going to cease to exist, and all of these things. And fintech started to realize over time that customer acquisition is hard, even if trust in banks was low. Regulation is hard. It's hard to navigate. It's hard to figure out, especially when you have innovative business models. And so there was this maturation process that I think really brought fintech into the mainstream as they sought out regulators, they sought out their place in the policy world and in the social world. And so fast forward to the COVID economic crisis, financial services is not at the core of the crisis, meaning it's not part of the cause. Mm-hmm. Government was really looking to the private sector and financial services in particular to be part of the solution. I think the feeling was, okay, last time you guys were the cause and we helped you out, right? This time you're not part of the cause. We expect you to help out everybody else now. And FinTech was sufficiently or is sufficiently mature where they said, hey, we can be helpful too. If the promise of FinTech is faster and safer and all these things, right? We can deliver emergency loans. We can do PPP faster than the banks. And it was really an opportunity for FinTech to show up, as it were. It was really one of the first real tests because in truth, FinTech hasn't seen an economic downturn between 2008 and now. So the business models had to at least try and weather the economic calamity, but then there was this opportunity for them to contribute socially to the economic repair of the country. And, I think there are some good examples of ways FinTech was able to do that.
Yeah, terrific. And Adrienne, any examples that stood out to you in particular, whether it's with respect to use of alternative data, et cetera, that really highlighted sort of the positive role that can be played?
Yeah, I think, you mentioned PayPal and others who were able to get involved in the stimulus payments and PPP, right? Being able to underwrite and deliver loans more quickly, really demonstrating the power of faster payments. And, this has been an ongoing dialogue around faster payments and the impact that slow payments have on financial health, right? The negative impact they have. So I think those are certainly some key examples. But even before COVID, right, we see the Chimes of the world giving people their paychecks a couple days earlier, which makes a big difference for people. We're seeing the earned wage access companies popping up, right, and making it possible for people to get paid more frequently so they don't have timing gaps between when they get paid and when their bills are due. So I think all of these innovations are really important and they're easy to overlook, right? If you are well off, you don't think about the time it takes from your paycheck to hit your account and when those funds are actually available to you as problematic, right? Because you have a buffer there. So all these little things that are often easy to overlook, but that make a big, big difference in people's lives. And, we've seen a number of fintechs be able to step into the breach there.
Yeah. Picking up on that payments observation, on the public sector front, the pandemic did seem to lay bare how antiquated our financial infrastructure is here in the US. And so what were some of your key takeaways around what we need to do to fix and modernize our system so that we're better prepared, more resilient and effective the next time around?
Yeah, I think, payments is the primary example. The fact that we were still having to mail out checks, right, to people and then essentially say to these people, for many of them, and you still have to go to a physical location to deposit that check or cash that check, right? If you don't have a bank account at a time when you couldn't go to a physical location, right? It wasn't safe from a health perspective. And so that to me just really stands out in the 21st century when everything is digital, why we couldn't just deliver payments digitally, why, identity is still an issue, why our tax system is still so separated, right, from our banking system, why we can't use alternative data to make predictions about, the amount of stimulus people might have been entitled to, things like that. I think it really did highlight just how antiquated, as you said, our infrastructure is. But as, often people talk about the opportunity that comes with crisis. And I think the COVID laid bare a number of issues with our society, shall we say, but presented us with many new opportunities to really take a fresh look, not just at our financial infrastructure, but at our health infrastructure and other things.
Great. That's a really helpful jumping off point to shift gears and look forward. So as you do look forward, what additional policy or regulatory pieces do you think we need to put in place to lay a foundation for a more fair and inclusive financial services system moving forward?
Yeah, I think, part of what regulators have been grappling with, even since my time in government, is how do you apply sort of the good things we think about regulation, consumer protection, market integrity rules, things like that, to business models that maybe don't quite fit the regulatory framework. And that's a big question. The other maybe even bigger question is when you have a rulemaking system that is slow by design, right, and very deliberate by design, and technology that's moving very quickly and evolving very quickly, how do you marry those things up? How do you shrink the gap between evolution or changes in technology, and how you can make rules to keep up, but do so without front-running technology and hindering innovation, right? So those are two big philosophical questions. But I think in terms of thinking more broadly about what it means to bank, not in the bank holding company, right, depository institution sense, but what are the products that people need and use, right? What are the gaps that predatory services like payday lending and check cashing are filling? And then working backwards to say, okay, how do we look at fintech or even traditional financial services? What about the regulatory system is preventing these services from being provided in a way that's inexpensive and efficient and digital, right, and consumer friendly? And working backwards, starting from the end or goal, and looking at the regulatory framework to make adjustments such that we can make and deliver financial services in a way that's useful to people who are most vulnerable.
Yeah. And Adrienne, as you think about the work ahead and the role that technology will play in it, and you've touched on, right, it creates both opportunities and risks. If you were advising sort of the Biden administration, how should they think about striking that balance between consumer protection, market integrity, fostering innovation? How do you get that right to harness the upside and mitigate the downside?
Yeah, I mean, it's a hard thing to do, and there is no perfect way to do it, right? It's very subjective, but I would say engagement between the public and private sectors is critical. We cannot afford to be in this place where we have this dichotomy of the private sector is evil, the public sector doesn't understand technology, right? There has to be that engagement so that people can come to agreement on what the common goals are and work together toward that. I know it sounds Pollyanna, but it is possible. We've seen it happen in government. We're seeing it happen in the context of climate. So a lot of it has to do with making sure that rhetoric does not interfere with actual policy making. And then I think, being open to new structures. So of course, the folks in this audience will be familiar, right? The FinTech charter has been very controversial, and I'm not weighing in on one side of that or the other, right? But how do we accomplish a goal of bringing some of these FinTechs within the regulatory perimeter and doing so in a way that allows them to continue to innovate? And so I think, there's a lot of nuance there, and the way you get at that is just by setting common goals and having the engagement between the sectors.
Great. You mentioned climate, Adrienne, and so maybe help us peer around the corner. What other emerging opportunities, risks should the audience be keeping an eye on?
Yeah, absolutely. Well, I mean, with climate in particular, right? I mean, we're hearing so much now about climate finance, financial services and climate. So how do we think about risk and financial services? How do we think about financial stability and climate? And again, can we think about mitigating the risk that climate change poses to financial stability, but in a way that doesn't hurt LMI populations, right? That's a big question that I think regulators and policymakers are dealing with. Similarly, right, as we think about financial health in the wake of the pandemic, coming out of the pandemic with this new lens or this renewed lens of equality post-pandemic, post-George Floyd, all right, should we be thinking not about race-neutral regulations, but things that are affirmatively taking race into account to help make sure we have a more equitable financial system, a more equitable housing market, right? And even that we're thinking about some of the fixes for climate change more equitably. So I think these questions around, especially around race, but also around economics, right? And we're so allergic to factoring those things in, and for good reason. But now with, the benefit of hopefully some renewed discussion around these topics, how can we incorporate some of that data, some of that thinking for more equitable outcomes?
Very much appreciated. I know another topic that's on folks' mind is central bank digital currency, and that's an issue that's risen in visibility. Speak to us about some of the work you've been doing on that topic and how that is playing out.
Yeah. But part of my work at the university is around this project we call the Central Bank of the Future. And a big part of that, obviously, is central bank digital currency. I think, it's risen in popularity. Now there's more than 70 central banks around the world that are in some phase of exploration or implementation around central bank digital currency. Obviously, the Fed has its work with MIT out of the Boston Fed. I think it's come up for a number of reasons. One is just thinking about inefficiency in payments, as we've talked about, whether it's timing or expense, and transitioning to a digital currency as a way to mitigate some of those issues. But I also think we've seen discussions around CBDC accelerate because of the rise of private currencies. So Libra DM, pick your other stable coin, even with Bitcoin and other cryptocurrencies. For those economic historians in the group, right, they will remember times going back centuries where we've had these experiments or periods in history where we've had private currencies competing with public currencies. Those stories don't often end well, and I think central banks are realizing with the growth of other digital assets and stable coins, right, digital currencies, that fiat currency has to be able to keep up if they're going to maintain control of monetary systems. And so that's why you see 70 plus central banks, including in the US, thinking about central bank digital currency and what it's going to mean for financial inclusion, monetary policy, the payment systems, et cetera.
Terrific. I think we have time for one question from the audience. Adrienne, it says here, you mentioned our payment system as an example of how our financial infrastructure is outdated. Are there other areas in our financial system that need evolving?
Yeah, I mean, I think another one is credit and access to credit. So that's a prime one where we think about FICO and DTI ratios, right, as our primary way of assessing credit, but they are backward looking. They don't often take into account thin file borrowers, right, people who may be very creditworthy, may be paying every single bill on time, but doing so in cash, right, or that don't have a mortgage, or that never took out a credit card because they really wanted to be responsible, and so they don't have a credit history. So thinking about cash flow underwriting, more predictive underwriting rather than underwriting that is backward looking, right? Like the way we think about credit, I think is also fairly outdated. So that's another, I'd say, prime example there.
Terrific. And maybe to wrap up, as you're doing this work on central banks, putting their hat on, what else is weighing on them? As they're going to sleep at night, what are the other key issues that they're thinking about to help us get into that mindset?
Yeah, absolutely. So not surprisingly, central banks around the world are thinking about climate. And they're thinking about, I think they're thinking about it in a couple of ways. One is certainly a financial stability question, right? Mm-hmm. If you have banks that have a large amount of assets with exposure to climate risk, what does that mean for the safety and soundness of the financial system? But I think a lot of central banks are also thinking forward. How do they use their levers, their policy levers, their regulatory levers to help us improve our situation where we are today and hopefully reach some of these climate goals that we've set out for ourselves. So I think, central banks, given their power, their independence in many jurisdictions, right, they're very well situated to help us meet some of our climate goals.
Great. Well, thank you, Adrienne. We've covered a lot of ground. You've given us a lot of food for thought. We really appreciate both you and the audience for joining us today for this conversation, and are looking forward to the remainder of a terrific Emerge conference. Thank you so much.
Thank you, Sarah.